I put my faith in a ticker, like a preacher to a prayer. Swore I saw a sign, but turns out nothing was there. Took a loan, took a chance, doubled down on borrowed time. Now my bank account's a graveyard where my dollars go to die. I was riding high on promises made of smoking gasoline. One bad trade, one last mistake, and it all came crashing clean. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green. Whiskey and regret don't mix well with candlelight. Watch my future turn to ashes in the quiet of the night. But pain's a damn good teacher when you're sitting on the floor. And I ain't one to stay down, I've been broke before. I was chasing gold on a crooked road, didn't see that it was paved in dust. But the good Lord knows, and the wise man says, that a fall don't mean you're crushed. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green. Had to lose my pride to find my spine. Had to break apart just to realign. Storm came hard, but I let it pass. Now I'm standing here with a second chance. Lost it all in the blink of an eye. Burned my wings on the way to the sky, but the sun don't shine on the reckless kind. Had to learn how to fall just to rise. Now I'm picking up pieces, stacking them tall, brick by brick till I get it all. Might have lost every dime, but you best believe I'll be back in the green.
Brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where it is a beautiful September Wednesday, the 3rd, aka Hump Day, aka the day that we find out if we're bounce or bust. Obviously, Friday of last week, somewhat decent, little bit of a sell-off, big gap down over the holiday weekend, leading us into somewhat of an impressive recovery. A portion of a recovery, if you will. I wouldn't say a full-on recovery, but solid price action yesterday, especially in the latter half of the day. But as I'm about to show you, the options market is telling us something very, very different. As I put into the Discord early this morning, your boy, this guy, Thick Kohrs, is stuck in neutral. In the short term, we have bullish price action on one hand, but we have bearish options flow on the other one. So it's time to, I guess, basically kick back and wait and see who's going to win. Are the traders going to win? Are the option players going to win? Or is today going to be one of those awkward whipsaw days because Captain Condor is back? You heard me right. Captain Condor is back. There's a giant iron condor, the combination of a call credit spread, a put credit spread that might just put some guardrails on the day. And we honestly might not even begin that much of a breakout. So there is a chance that we don't even get the answers we want today. So of course, I'm going to be breaking it all down for you. a little bit closer to market open, we're going to be getting into that nitty gritty of what is actually happening, like the true stats, facts, and figures. But before that, I kind of want to let you a little bit more of the context, the narrative we're in, which right now is still being driven by specifically today and this week jobs numbers, which relates to the overall concept of monetary policy. But remember, we have some offshoot drama as it relates to Trump and Lisa Cook and really the Senate panel. Are they going to approve a new Fed governor? So we do have some contextual things to go over. Then we'll get into the actual price and technicals and the options flow. And then at that point, the market's going to go dingity ding, ding, ding. And we're going to find out if we are making money or losing money today. So before we get going, if you guys could, don't forget to like, subscribe, turn on your notifications. That type of engagement really does help get this show in front of other people who might care about it. Obviously, it is free for you to like, comment, and subscribe. That type of engagement, truly, truly, thank you. Truly appreciate it. And with that being said, let's just get rocking today because I do have a fair amount of things that I kind of want to get into. Here's what's going on. Obviously, yesterday we had a bit of a pop. People were calling out the upside gap fill. Then we dropped. And right around lunch, we got going. And it was actually kind of impressive here at 245 of how much we really started popping into close. Same thing on the SPY and the Qs. Pre-market trading, SPY stronger, Qs stronger, Russell flat, Bitcoin flat. So across the board with respect to price action, I would say it is neutral leaning bullish is probably the best way to say it. And part of the reason why tech is looking so good is because of Google. S&P 500 futures rise after Google avoids harsh antitrust penalty. So for quite a while now, we've been talking about the various legal cases that Google faces for monopolistic antitrust practices, whether it relates to their search engine, whether it relates to their advertising, whether it relates to this, that, or the other thing. It does seem as if Google is attempting to dominate in it. And as of right now, one of these cases is going the way of Google. Google dodges worse penalties in U.S. antitrust case. Judge bars company from exclusive deals, but allows it to keep its Chrome browser in high-stakes agreement with Apple, which was one of the big deals. But remember, this is not the only big deal going on. There was a video breakdown. Why did I not find that? Where is it? Right here. Google dodges Chrome sale in the antitrust case. Must share data. Right here. We have this. So breaking news as of yesterday, and if you look at Google, it was looking pretty freaking good.
Back to that breaking news from Google, a court ruling they are not required to sell Chrome. Let's get to Mandeep Singh of Bloomberg Intelligence for more context here. You can see that the shares are spiking in the after hours, Mandeep. How surprising to see this is this?
It is surprising because Judge Mehta was in favor of divesting Chrome, which is the key asset here that everyone is looking at. And in this case, I think the ruling clearly states that they're not required to divest Chrome. At the same time, there won't be any exclusive contracts, so that means the Google-Apple thing won't be at least allowed anymore. And then also related to Android, there won't be any like licensing agreements that bar certain companies. So really, I think what it seems like is they are in favor of opening up the platform where other companies can bid, but there is no talk about, Google having to divest any of their assets.
It's amazing Google can go up 6% just like that, like it's a small cap. I mean, that's how powerful
Huge
these stocks
pop.
are.
Billions
We talked to
of
Anurag
dollars
earlier
added.
about the other things Google owns, like YouTube would be like the 20th biggest stock if it were spun off. Could they go after other parts of Google in an antitrust way?
Not really. There were two big lawsuits. One was the monopoly lawsuit where Chrome was the big asset that everyone was focused on. And look, the reason why you're seeing a 5-6% move is because when it comes to Chrome, over 3 billion monthly active users, AI agents and everything that's going on in Gen AI, browser is the most important asset. So if they were restricted in some way, I mean, that would really hurt Alphabet's position in Gen AI. So from that perspective, it did warrant a big move like this.
And Mandeep, we have about a minute left. We're talking about Alphabet, but take a look at shares of Apple, up about 3.7% in the after hours trade as well. What can we extrapolate from this ruling into Apple?
So look, I mean, clearly the agreement that Apple had with Google is at least not allowed anymore, or that's what the ruling suggests. But Apple is looking to use someone else's model. So, from that perspective, probably they could use Gemini or something related to Google to catch up to other companies when it comes to incorporating Gen AI. So from that perspective, I do think it's a positive that Apple can use something of Google going forward, and there are no kind of big restrictions that are.
So that's pretty much your TLDR of what's going on with Google mainly right here. I'll show you Google. There's Google, and then we'll show you Apple as well. So in pre-market trading, Google's currently up 6.8%, closed out the day at 212, currently trading at 226. Apple closed out the day at 229.72, currently trading at 238. So both of these looking really good. Apple up 3.7%, Google up 6.9%. Specifically, it is the movement of these two, which are top 5 stocks in the world, of why the Nasdaq is looking uniquely good, and it's also obviously very much helping the SPY. So I want to kind of clarify that clearly, this is bullish news, especially for the equities. But in terms of other broader movement in the underlying market, not much is going on. It's because of these two on the right side of your screen of why the overall market right now, the S&P 500 and the NASDAQ, are looking pretty good. Same thing with the Mag 7. So it's because of these two and the lawsuit that is obviously breaking in the favor of Google, and obviously also helping out Apple. So just want to kind of break that down of why we're seeing some bullishness. And really, this got going right at market close yesterday. And if you look at the time that all of the legal jargon and whatnot was being reported, that's exactly when it happened. And you could see these things just started shooting up. So if you caught this, massive congrats to you. This is by no means my edge. I'm not a lawyer. I had no idea to in any way model out the probabilities of it going their way, not going their way. So if you got it, huge congrats. I understand that maybe some of you in the audience are a little bit more in tune with the legal world, and maybe your interpretation of the suit, maybe that gave you a bit of an edge. But for me personally, when it comes to binary events that I have no particular knowledge of, hey, who's likely to win or not, I tend to stay away. So if you were bullish on this, congrats to you. If you were bearish on that, well, hey, maybe you'll make it back today. U.S. Treasury yields brush with 5% as global borrowing costs mount. So we're now getting back into the larger picture of it and how the monetary policy setup is going to impact the economy and thus the stock market. But yeah, we are seeing interesting things start to occur. TLT, this is going to be your 20-year bond. Remember, bonds and yields move inversely. So as bond prices fall, yields go up. As yields fall, bond prices go up. They're going to move inversely, opposite of each other. So right now, bond prices are continuing to drop. And then even here, US 10Y, I believe is... yeah, we're seeing yields start to go up. This is the 10, and you could check out whatever time that you particularly want. So we're seeing some movement there, and that's obviously going to relate to last week's inflation and then this week's job numbers. So please keep all of that in mind. But I also want to point out to you, as this is happening, gold is ripping like no other. This in itself is making me a little bit hesitant of the overall recovery in the stock market, just because I mean, traditionally, this is thought to be a giant flight to safety. So the fact is that people are buying gold like no other. It's at a new all-time high, which makes me really think, okay, if people are buying this like no other, is there really that good of a chance of a strong recovery in the equities market? Because clearly the flows into gold, it's not really going into Bitcoin. Seemingly, as of now, we're going to find out a little bit more today, but more so really on Friday for the equities market. But gold is ripping. So that's another one that I just want to point out, as we're seeing some funkiness in the fixed income market and in the equity market and in the crypto market. As of right now, the winner seems to be the precious metals, specifically gold. Trump's drive to reshape the Fed progresses with rapid Senate hearing. So remember, there's two different narratives currently going on. Well, three, I guess you could call it. But remember, so we had the Lisa Cook one, and I'm going to get into that. But remember, he already gets a spot because Kugler, she stepped down. So this guy is going to be like, it says it, rapid Senate hearing. So he's going to get completely drilled, and then most likely it's going to be some big political fight, and then all of a sudden he's going to get picked anyway. So this guy is in. The Senate Banking Committee is to hold a confirmation hearing for Stephen Miron's appointment as governor of the Federal Reserve, a nomination by President Donald Trump. So this guy's most likely going to get in, and then obviously he also wants to kick Lisa Cook out, a current sitting Fed governor, and he obviously wants that because at that point then he'll have have a majority of Fed governors, 4 out of 7. And then don't forget that May of next year of 2026 is when Powell will be stepping down. And at that point, Donald Trump really will be able to showcase quite immense power over the FOMC in general, but specifically Fed governors. Fed Governor Lisa Cook did not ever commit mortgage fraud. So this is the second piece of drama related to, should she be in her position? Can Trump actually fire her with cause? Obviously, we know legally he can't get rid of her at will, but with cause. And then the question is this quote unquote mortgage fraud, this alleged mortgage fraud, is that enough cause? So this particular narrative, we do have an update on, and it's getting a little bit crazier than I ever understood. So remember, Pulte is the guy in the Trump administration kind of pushing this effort. He doesn't know the difference between primary and personal residence. Primary is where you live, get mail, use legal tax documents. Personal is you own it, use it for yourself, but don't live there full time. So we're looking at the properties that she has and how they were properly, because this all comes back to allegedly, once again, I'm not a lawyer. I've watched some of Suits, but hey, not fully there, haven't passed the bar. But basically, this concept of mortgage fraud is when you apply for a house, and if you're saying it's your primary residence, generally you get a lower interest rate at it. And she, within a 2 to 3 week period, apparently said that 2 different places are her primary residence, and that does impact the rate that you get. So you could see the rates right over here on this side of the screen. She had these 3 different properties. Those are phenomenal rates. But the follow-up that's interesting is right here. Update. Lisa Cook listed the Cambridge home and the Ann Arbor home as residential investment and residential rental properties on her federal disclosure. She also declared the rental income of both. So this is coming back to her current defense of, it was a clerical error when getting the loan for the second house to call it her primary residence. But the other information, once again, her federal disclosure, they are right here. Residential investment and residential rental and paying taxes on it. So there is some documentation actually suggesting that she was doing it above board. And then there's other documentation, and this is specifically with the Trump administration and really Pulte are leading into, of saying, hey, that's a little suspect. So the story itself is getting a lot more convoluted, a lot more murky. And I just wanted to bring it to your attention because this is like one particular fight that Trump himself is really trying to campaign for, because obviously wanting power over the Fed. So I'm going to keep you updated on it as we get more and more information. But as of now, it is not appearing to be one of those like cut and dry type of situations. Speaking of the Fed, as of right now, 84% chance, according to Polymarket, that the September meeting will be a 25 bips rate cut. And looking over here at Call Sheet, they are currently putting in at 81% chance. So basically 4 out of 5 times, according to Polymarket and Call Sheet, we will be getting a 25 bips rate cut at the September meeting. Is it necessarily solidified? No, but the odds are obviously very high. And I would assume after the jobs report this Friday, we're getting the unemployment report once again this Friday, that these odds are going to get a little bit more clear. So once again, this Friday, an hour before the market opens, we're going to be getting the non-farm payrolls and the unemployment rate. The expectation is 4.3%. So that's this Friday. Today at 10 a.m., we're going to get the JOLTS job openings. Remember, the first calendar week of a new month is always when you get the jobs, all the job stuff for the previous month. So JOLTS job openings, July, we're going to be getting some ADP non-farm employment change for August, obviously the unemployment rate for August, non-farm payrolls for August. So this is generally the cycle that we're in. And this time around, it's massively impactful because of where it is, its proximity to that next FOMC meeting on September 17th. So today we do have some numbers. Tomorrow we have numbers, and Friday we have numbers. So pretty much all of these, we have numbers. If you haven't already, sign up for the newsletter, MattKohrs.locals.com. It is 100% free. It's always been free, always will be free. Comes your email inbox every single Sunday. I break down what's going on in the market. Cheat sheet for the earnings. The major one to pay attention to this week is Broadcom reports tomorrow after the market closes. I give you a cheat sheet for all the major macroeconomic events. Today we have the JOLTS job openings and the Fed beige book, 10 a.m. and 2 p.m. respectively. And then probably most useful is the seasonality of each individual day. this particular day, Wednesday, September 3rd, over the past 27 years worth of data, it does slightly favor the bulls. This is a look at the hypothetical equity curve you would have if you bought it open and sold at close on the S&P 500 futures market. For the first 15 years, you've gone nowhere. For the past 10-ish years, kind of up, recently a little bit of a downswing. So overall, it's neutral, leaning bullish. It's not the strongest seasonality day we've ever had, but I just want to let you guys know the stats, facts, and figures for this particular day. Tomorrow does more so favor the bears, and then Friday, neutral, leaning bearish, kind of actually really jagged on that particular Friday. So that's the setup from a higher level view. Speaking the higher level view, here's where we are on the daily chart. Obviously, we put in an all-time high on Thursday, August the 28th. Ever since then, we have lower highs and lower lows. By definition, that is a shorter-term bearish trend, but we did seemingly catch ourselves at this overall kind of flag channel situation. So we caught ourselves there. There is still that upside gap fill to 6,444, so you might want to be paying attention to that today. Nice upside gap fill opportunity. And then I would say the legitimate breakdown where we're switching from a shorter term to more of a medium term, like actually solidifying the breakdown, is if we take out that low from Wednesday, August the 20th. So these are, on the swing perspective, the two major levels that I'm paying attention to. If you look at the NASDAQ, it is actually a bit weaker because compared to SPX, we still have higher highs and higher lows. NDX has not put in a lower low yet, but it has put in a lower high. So it's kind of flagging that there might be a bit of a switch as it's kind of pressing on the bottom end of its own channel. But like the SPX, there is the upside gap fill to the low from Friday, and we got dangerously close to a legit breakdown yesterday. Caught itself at the 50 EMA, didn't actually get the breakdown, but obviously those are some of the medium-term levels, rather not really. Oh, well, of course they might come into play with day trading and scalp trading and whatnot, but more of that medium-term swing, that's kind of what I'm paying attention to. With respect to today's actual activity, well, Captain Condor is back. Right here, you can see it. Captain Condor is back. Let me zoom in where you can see it the best. The size is decent, 10,000. It's about 2.5x more than the normal size. Generally, when Captain Condor is playing, it's around 4,000. Today, it's around 10. So we have Iron Condor, combination of a call credit spread and a put credit spread. The call credit spread is structured at 6,445. The put credit spread is structured at 6,375. So if you don't know what this is and how you make money off of it, how you lose money, this player is hoping that we conclude the day somewhere within these bounds. They want it simultaneously below 6,445 and simultaneously above 6,375. They want it. It's kind of that in between. It's what happens when you have the combination of an underbet and an overbet at two different levels. This is their sweet spot. So that's the process of this particular trade. Functionally, what does it do? It adds quite a bit of positive gamma to the overall gamma structure. And remember, when you have positive gamma from a market maker's perspective, that means we're in a mean reverting mode. As we go up, market makers sell. As we go down, market makers buy. That is what positive gamma is. It is sticky price action. It is mean reverting price action. Sometimes we'll have negative gamma, which is much more of a trend following. Those days where we get the big 2-3% moves and we just keep going and going and going, most likely that's going to be highly correlated with negative gamma. Days like yesterday where we kind of sold and popped and then dropped and then sold again, like that, where we kind of like violently go nowhere, that is generally associated with positive gamma, which is exactly what we have today due to really, well, before this, we already had quite a bit of sold premium, but the Captain Condor, which was created right after the market closed yesterday, definitely adding to this overall situation. So with all that in mind, my overall transition zone on the day is that Captain Condor. Obviously, above the Captain Condor, it gets a bit bullish. Below the Captain Condor, it gets a bit bearish. But within it, we do have two key levels. There's a lot of extra structure right here at 6,400, so worthwhile to pay attention to that. Big open interest level, big technical level, big psychological level, and then also just from pure technical analysis, watching yesterday's high and closing value is also big. So this is kind of the junk that we have to pay attention to at start. And please don't forget that we have that 10 a.m. announcement, which might help with a breakout, breakdown, fake out, breakout, fake out, fake out, breakdown. So that's what I'll be paying attention to in terms of reach targets for the bulls. You could watch 6475, a big open interest level. And then for the bears, if we end up breaking down below 6375, you could watch yesterday's low and also the big open interest level at 6,350. Oops, let me put that back to where it should be. But overall, generally, not all the times, of course, you could find counterexamples to this. When you see such a large gamma delta influence from a large play, not always, but commonly you do end the day within those bounds. There are certain situations where you break and you really get going because of how the market makers have to re-hedge out their books upon like that position going bust. So it's one of these weird things where the probability of us breaking the bound goes lower, as in not likely, but if we do, then you can oddly expect bigger moves. So it's kind of like a weird catch-22 type of a situation, but overall, these are the major levels I'm paying attention to. Of course, throughout the day, we're going to be tracking the options flow, so I want to bring that to everyone's attention. I should also let you know before the market opens that for the past 2 trading days in a row, Friday and Tuesday, the overall big players on the entire New York Stock Exchange were net sellers. So there's a little bit of bearishness there, of course, the entire New York Stock Exchange. But I also want to bring this to your attention. Obviously, we saw a bit of a recovery yesterday starting at noon and then going all the way to post and pre-market trading in the SPY and the Qs. So from noon till now, I would say that clearly this is bullish price action by the fact that we just have higher highs, we have higher lows, the EMAs are all pointing up. I mean, right here, momentum wise, bullish, momentum wise, bullish. So things in the shorter term have gone bullish, but with respect to options, still pretty bearish. So check this out. What traders should know? Let me zoom in. Remember, you could get this from SpotGem. It's going to be free. It's in the description of the video. It is free till the 5th. So if you want the most comprehensive, useful, factual breakdown of what's happening in the options market, I recommend you check this out. But right here, what traders should know today, executive summary, extreme Vega alert. So that's on MicroStrategy. So basically that's part of the bearish crypto flow. SPX Gamma Extreme right here, indicating a very high hedging risk. So a lot of people for the first time ever since basically mid-April have been saying we need downside protection. So that's useful to pay attention to in the overall market. Crypto Shift, another MSTR one. GDX, highly unusual flow in the metal sector. That's where we're seeing all of not only the bullishness, but actually high vol, like the Vega, the sensitivity to a change in volatility. So we're really seeing GDX go, probably going to be negative gamma, so trend following. So basically, really upward movement is begetting more upward movement. And then right here, strong bullish delta in index ETFs despite closing. So that's a little bit of a side note. But what I want to bring to your attention here is, remember, you have buy to open, buy to close, sell to open, sell to close. So what I care about are the openings. Like I want to know about the new bets. So if we look at all the buy to opens, IWM puts, QQQ puts, and then right here, VIX calls. IWM puts, NASDAQ puts, and VIX calls, that's all by definition bearish. I should also bring to your attention the expiration of some of these things. It's not as soon as you would look. Most of these are actually October, but some of them are even in November. Also on that, selling to open, no one's really touching anything. So in terms of the new positions, people are clearly betting against the Russell for October. They are betting against the Qs for the 5th, as in 2 days. That's a brand new position. Someone is targeting the 560s. That's crazy, especially because aren't we at 570? Yeah, we're at 570. Someone is betting on for this Friday. That is a shitload of money. They are betting on that clear drop. That's crazy. And then selling to close, they're just getting out of some of the selling to close. So people locked in some of their profits and are seemingly now rolling. Yeah, they sold to close. They rolled it down roughly the same size. So once again, this is just a breakdown for index. Obviously, they do these updates for single stock. NVIDIA might be an interesting one. Buy to open, sell to open. That's obviously kind of a spread play there. Sector breakdown. So right here, gold getting crazy. GDX, which is going to be the ETF for gold, going absolutely crazy. Top position changes by Delta. A lot of people playing MSTR. Someone was rolling some calls. You have some call vert credit NVIDIA. So that's neutral to bearish. So very cool, useful tool. Gives you the actual change rather than those engagement farming flow bros where they pick out one individual thing and like, look how crazy that is. It's like, no, we actually need the like holistic picture breakdown. So as I kind of started off today, personally, I'm stuck a little bit in neutral because I see that we are trending up with respect to price, but the options flow is clearly down. And I also can't shake how weird it is that gold is absolutely ripping. So what does that mean for me? That means for me that I'm going to sit back and just wait until something is so evident that I should play it, because for me to just guess right now, I don't know who's right. I don't know who's wrong. I don't know who has the most influence. So I'm going to do my best to kind of just sit back, relax, and see how things really play out. And on that particular note, I should let you know that you guys saw this yesterday. I do now have the 20 PA accounts for the 50K, and then the Apex accounts, actually the 150 ones, on the bounce back yesterday, I were still positive, but because I came back so much from my unrealized drawdown, I blew out. So I restarted a whole new set because they were so cheap, and I made about $1,000 on them yesterday. So currently I have 20 PAs and then 20 evals all on Apex. And on that particular note, dingity ding ding ding, the world's largest casino is now open. Best of luck to all, play responsibly, and if not, have fun. All right, so the plan for me, and obviously do what you want. I am not your mom, and if you're making degenerate trades, I wish you the best of luck. I hope you make a killing. I hope you make a bunch of money. But my personal plan is to do nothing and wait. So my reasoning for that is twofold, actually threefold. Fold number one, we are right at the bound of Captain Condor. I want to see how this plays out. Fold number two is because I see strong price action but weak options, so I don't know who's right there. And then fold number three is the fact that we get the JOLTS job reports at 10 a.m. today, so I don't really see the biggest advantage of trading before we have such an impactful event coming out. So for me, I'm just going to wait. I'm going to wait. Obviously, if you're choosing to trade right now, truthfully, I hope you make money. It's not necessarily my style because I like to trade off of established support, resistance, strong flow. Like I want to trade with what I can identify to be the big trend. And when we're literally 1 minute into the day, it's hard to identify what the trend is, at least in my humble opinion. Speaking of that, let's see what the flow is on the day thus far. We'll keep kind of checking this throughout the day. Here is your delta movement on the S&P 500, and here's your delta movement on the Mag 7. So I'm really hesitant to say anything because we just only have a minute worth of data, so who knows what in the world that's going to be. We'll also be able to check out the book map. Remember, sitting sell orders, sitting buy orders, so we're going to check this out, see where the passive positions are really going to be structured on the day. And of course, we'll be able to see what the big guys are doing, but generally they take a little bit to get trading in the day. So I deeply believe the name of the game today is to have a little bit more patience, even more than normal. Obviously, patience is always going to be a virtue in trading, waiting for that perfect sniper-esque setup. But for today, I just want to wait it out. And in terms of as we're waiting, just to kind of give you the key levels, this is the SPY ETF, the S&P 500 ETF structure. You can see we have right here, we are trading around 642 apparently. Is that right? 643. 642. So that puts us right here. 640 is big support, big gamma support. If that doesn't hold, we're talking 635. If it does hold, we might be talking 645. So basically the three major gamma areas where market makers are going to have to react to it. 635 is by far the biggest, but it's kind of far away. It's also very close to that high vol point. Once again, 635 on SPY, very important. Mark it down, set alert, do whatever you need to. 640 is kind of the breaking point where that sets it up, but for right now it might act as support and send us back up to 645. With respect to the Qs, we are around 568-ish. 565 is kind of that breaking point, setting up a test of 560, but if it does act as support, we might revert all the way back up to 570. So once again, just you might want to write those down: 560, 565, and 570. And these were all accurate positions as of, I think, like 3 a.m. this morning, just to kind of give you guys the context. So basically captured all of yesterday's trading and a little bit over the overnight. But once again, 570, 565, and 560. So really the breaking point is 565 on the Qs, and the breaking point on the SPY is, I guess 640, but then there's another one at 635. So feel free to write those down. Other than that, a little bit of a mixed bag out of the gate. Apple's looking really good. Google's looking really good. We do have some green, but we also have some red. Remember, Avago is going to be reporting after the market closes tomorrow. So if you're playing semis, like something like SMH or Soxel, there's going to be an impact there because Avago Broadcom is the second largest semiconductor play. What else is moving? So Apple kind of losing it a little bit. Google winning one of their very they're varied lawsuits. Avago's actually getting hit out of the gate. So tech is showing a little bit of weakness out of the gate, while SPY is actually showing a little bit of strength. Right now, the 5-minute with respect to momentum is undecided. Could be above, could be below. Same thing with 10-minute. It was a little bit more bullish, but it's testing right now. 30-minute, a little bit more established with how bullish it is. And the 4-hour still bearish. With respect to the NASDAQ, 5 minutes breaking down, 10 minutes testing, 30 minutes still bullish, 4-hour is still bearish. So from price action, from momentum, and from options right now, I would just say we're awkwardly in the in-between. I would very much say that. So we went from having an upside gap fill yesterday to now we have a downside gap fill, to clarify. So SPY hitting the wick from Friday, but now this means that we literally from a gap to a second gap, this is now turning into a downside gap fill. So let me crossing down. We'll probably see that on SPX as well. Yeah. You see how we gapped down but popped up. This now means we actually have that's weird. You don't see this often, but this trade is now actually turning into a downside gap fill. So yesterday, what we were calling, hey, maybe a bullish upside gap fill, good opportunity because we gapped down. So playing that trade, that worked this morning. But now that we've gapped up so much from that, this is actually now leading to a downside gap fill. So you might want to, on SPX, be paying attention to 6416. On SPY, you might want to be paying attention to 640.50. And on the Qs, same situation. Let's set up these alerts. Sorry, that's annoying. Crossing down, basically 566. So downside gap fill on the S&P 500 and on the NASDAQ from a daily chart perspective. Intraday perspective right here, I'm on the 1 minute. Remember, I'm not really doing anything quite yet because I want to wait for that JOLTS job reports, but we are at the top end of Captain Condor. Captain Condor is right here, 6445. It is a position, a call credit spread on this side of 10,000. That's quite a bit of positive gamma. So let's see how the market really wants to react to this. If I had balls, playing the rejection here doesn't seem like the craziest idea because your risk is so low. You're basically just using Captain Condor as your risk and being like, okay, we're just not going to go up. You're basically using the intraday high and you're trying to fade this back down to the closing value. That's not the most insane play. I've definitely heard of crazier plays for sure. I've definitely heard of crazier plays. Oh, brother. 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 Oh, brothers. But it is too far away because what is our opening? Yeah, that risk point is like 60 points. I don't feel like risking 60 points only 7 minutes into the trading day. So, hey, not my play, but if you take that play, I completely understand. Mag 7 flow this morning is perfectly flat. S&P 500 also pretty much perfectly flat. All right, as we're waiting for the opening to really tell us what in the world's going on today, as we kind of talked about yesterday, the assumption was after Apex's big 90% off deal that someone was going to start clapping back and try to get customers back on their platform. And it turns out it is Take Profit Trader. Right now, they are running a 40% off and no activation fee. So it's dirt cheap. You could use that code Goonie. It's pinned to the top of chat. It's in the description of the video. If you missed out on the Apex deal yesterday, right now, Take Profit running a very, very affordable deal. Once again, 40% off and no activation fee after you pass the eval. Use that code Goonie. On Take Profit Trader, the way the UI is set up, you do have to like specifically hit the apply button just to call that out for everyone. So I just wanted to let you guys know about that. All right, like I said, pinned to the top of chat in the description of the video. Use that code Goonie, 40% off, no activation fee, and definitely take advantage of that if you missed out on the Apex deal that ended yesterday. And just like that, things are going red. What was green at first is quickly turning now. Meta's looking decent. Avago's getting hit. Palantir's getting hit. Nvidia's getting hit. Microsoft's looking good. Meta's looking good. MicroStrategy's flat. Netflix a bit of recovery. All right, so it seems as if it's a tale of two different stories here, because certain things are looking fine, other things are bleeding. Apple, even though it's nicely green on the day, it's definitely giving some of that back right now. Tesla is kind of getting clear. Like, ever since market opened, Tesla has not been able to catch a break. Hang on. Try again and contact us if the issue persists. Hang on. They might be doing some sort of... Oh, I have to log back in. Hang on. Hold your horses. If you have a horse, please hold it. Yeah, the Tesla Delta flow is just getting hit. It is the combination of selling calls and of buying puts. So it's removing positive delta, adding negative delta, delta dropping all day there on Tesla. Mags, that's definitely not going to be helping with the Mag 7 much. And then here's a look at the S&P. S&P 500 slowly but surely actually climbing up thus far on the day. I have to log in again here. Mag 7 looks drunk, popped, dropped, popping again. Looks like we're kind of like all over the map here. Maybe a little bit of a double bottom on the Qs at the low from Friday's session. That's what this dash red line is. The dash red line on my charts on this view is the low from 2 trading sessions ago. I always like to track the high, the low, and the close from the last session and from 2 sessions ago. They just happen to be big technical and thus psychological levels. You find that the market commonly reacts to that. As of right now, the Qs do have lower highs and lower lows. By definition, that is bearish. Lower highs, lower lows. Obviously, it doesn't take a genius to figure that out. The SPY's a little bit different. SPY's a little bit more of a consolidation. We have lower highs, but higher lows. So bit of a consolidation going on in the S&P 500, bit of a bearish trend. And once again, this is all with respect to the 1 minute chart. Obviously, you're going to see different things on the 5 minute, the 10 minute, the 30 minute, the 4 hour, the daily. Trend is very specific to the time frame you happen to be looking at. There's no, like, of course, they might all align, but what you see on the 1 second chart could easily be very different than the hour chart. So I don't think that's like that big brain of a call out, but I don't think people really on a daily basis like consciously think of that, of how trend could be wildly different. So what I could call bearish, you could call bullish, and we could be right based on the time frame we're looking at, even though they sound like they're at odds with each other. The Qs are getting hit right there. Fuck. Oh, was this the trade? Was the trade at 9:41 this morning? I'm wondering if the trade of the day just occurred at 9:41 and I missed it. I could get in right now if I really like it, because you have well-defined risk. You're playing for the breakdown. You're trading with the trend. You have resistance at 400. Oh, I wonder. Oh, how's the hourly looking? Hourly starting to break down right back into those EMAs. Well, we're at VWAP, so maybe I don't want to be chasing this to the downside. This white dash line is the volume weighted average price, just common indicator that people are going to end up using. We just went up to 400. They are actually kind of buying this morning across the market here. Granted, it's very early into the day. Very, very early into the day. They're doing that. We have sellers at 95 and at 400. But then we have buyers at 75. They're kind of playing this 25-point region. Kind of playing this 25-point region. Interessante, Batman. What are we doing here? What in the world are we doing? Had I taken that short, I would now be pissed off that it bounced back. So maybe that's a good sign that I've been attempting to be patient. Maybe it's a good sign that I had a bit of patience today. But we know that there's aggressive sellers right here. You could see right here, they just got the fill at 400. They're also trying to sell at 410. I wonder if this is actually about to just get rejected. It ran into this sell side liquidity at 395 and also at 400 on the NQ contract. And then there's some trying to sell at 405. There's some trying to sell at 410. Granted, if there's enough aggressive buying, it could easily break through. I'm not saying that this is like a cemented thing that it has to break, but got absorbed there, got absorbed there. No clear aggressive buying or selling. You had some... I wonder. Oh, brother. What is today going to bring us? SPY catching a bit of reversion, a higher low. The Qs, not so much. All right. Mag 7. This is not reloading, so let me reload this. For some reason, it keeps logging me out. Keeps logging me out over here. All right, that's a look. So the SPY did get hit, kind of popped right there. Let's go to the Mag 7. Let's go to the Mag 7, see what we have going on. If that loads, I could see that the SPY took a bit of a hit right there. All right, those are the key levels. Feel free to screenshot them. Feel free to write them down. We could come back to them in a little bit. We could come back to those guys. What are we doing? So the SPY just took a hit. Is taking a hit. Jesus. That really, really did not. It just keeps getting smacked at the Captain Condor level. Just keeps getting smacked. Try that, but technically that is now higher highs and higher lows, at least on this time frame. Is it about to go? That's we just keep pushing VWAP basically. We just keep pushing VWAP. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Oh, brother. Thoughts? What reports coming out at 10 a.m.? The Jolts job openings. The Jolts job openings is... Look at that. 1, 2, 3, 4 tests right there. Look at that. Kind of choppy, kind of sideways. Back up to 400, the battle of 400. Here's your look at your minute. All right, so we have perfectly equal lows on the SPY and pretty much perfectly equal highs on the SPY as well. The Qs, pretty much the same thing. So the Qs puked for the first minute, second minute, ever since then, range bound. The SPY has been range bound ever since market open. We took a little bit of a hit, we popped back up, came down. So we have not made really clear, evident fresh highs or fresh lows. So as much as we are not breaking above this Captain Condor, we're also not really getting smacked below it. We are not getting smacked below it. Oh, golly. You know, guys? Golly. Decisions. What's the flow looking like?
Order submitted.
Fuck it.
Order submitted. Order filled.
Locked one in, set the other to break even. Maybe I catch it, maybe I don't. I don't know. A little bit of a risk. But hey.
Order filled.
All right. Second one got knocked out for break even, but made about 300 per account. So I tried to take the breakdown. Looks like it might have been a sweep, and that's exactly why I was aggressive with moving it back, just because we've seen these things a gazillion times before where it slightly goes below and then it pops right back. So if it did break, great. I had skin in the game. It did bounce back, so it is what it is. So in and out, about 300 per account. I did that on the evals, and then I also did that on the performance. So if that's my one trade of the day, I'm going to take it. But right here, that's a good real-time example of when you're trading multiple contracts of the flexibility that you are afforded when your first one locks in to be able to set the other to break even. So with this, I mean, in hindsight, it looks like I was really smart doing that because it just keeps going against me. But in reality, you never know which way it's going to go, folks. Like, obviously, you don't know which way it's going to go. So that's why I locked it in at what I deemed to be a key level. And then I moved my stop to break even. And it just so happened that the break even move got hit. It happens. Like, you have to play defensively. Like, I think even though it's not fun, I think a very healthy mindset is assume the trade you're about to do is not going to go well. And when you're of that mindset, you're like, okay, cool, I'm going to protect it. And then right here, dude, I'd be now very much underwater because I've seen this a gazillion times before. I got in on this breakdown. I targeted the intraday low. I got my fill at the intraday low. I moved my stop to break even. And the only reason I did that is because at this level, 50-50 chance. You either break and you make a lot of money, and if that happened, I had skin in the game. The other option is it's a fake out breakdown and we pop, and obviously we are in category number 2, so I protected myself getting out at break even. Easy. Like, I think there's a lot of people who try to model it out and be like, oh, I know this is going to happen. I know that's going to happen. In reality, no one knows. If I show you this chart right here, like imagine if I just froze this at 9:49 and I said, is this breaking out or is this breaking down? Half of you would be right. Half of you would be wrong. There's no model on God's green earth that can definitively tell you we're about to break down, we're about to break out. You need to, I guess, hope for the best, but most importantly, you have to be prepared for the worst. And for me, in that particular trade, I was prepared for the worst by quickly moving my stop to break even just in case we did bounce. And it just so happens that we did bounce. And now, if I was really shrewd, I could have actually played that. I could have cut it there, gone long, and rode this all the way up. Obviously, I wasn't quick enough to do that. But now, like, whatever. I locked in money, and if I want to call it here today, that's a good gain on the day. That's 1/10 of what I need to get to that, like, the buffer zone on these new 50K accounts. That was the first trade of these accounts. Obviously, I still have these other evals going on, but $300 across 40 accounts, that's a lot of money. So I think sometimes when we trade it, you look at an individual one and you're like, oh, 300 isn't that much. But think about the actual scale when you're trading so many accounts. Like, no, it could actually be massively, massively impactful. So I think a good mindset to have is just assume it's going to go bust, because then that gets you mentally trained to really just protect your downside. Surviving in this game is without a doubt just protecting your downside. Trump yesterday, the stock market is down because it depends on tariffs. They want the tariffs. DJT knows good jokes. What a joker. What a clown. That's a clown statement for sure. All right, what do we have over here? My producer's reaching out. President meets with Poland's president at the White House. What is he saying? We might listen to this till we have a jobs report in 7 minutes. Live in 6. Okay, so this is at 11 a.m., so we might not come back to that. 11 a.m. seems pretty far away. So, but obviously, as if you're trading today, you might want to pay attention to the fact that the president is talking. It sounds like he's actually talking right now as well. So we are seeing lower highs and lower lows on the SPY. We are now seeing lower lows and higher highs on the Qs. I hate this pattern. It's a broadening pattern. You might hear it referred to as a microphone pattern. But when you have higher highs and lower lows, it kind of tells you the market doesn't know what in the world's going on. But on that particular note, the SPY is running into issues. Once again, surprise, surprise, not a random level. This is where Captain Condor is, 6445. There's going to be a lot of people in this world who are saying, like, why is it getting rejected there? Why can't it break out? They're not going to identify it as a technical level. They're not going to identify it as a psychological level. It seems, quote unquote, random, but it's not. The reason we are running into issues there, I'm showing it to you, is because of the massive Captain Condor play that's structured at 6,445 spread. All right, we're getting an error loading this, but we called it out because that's where Captain Condor is. Actually, I could show you on my Twitter right about here. Right here, 6445. They sold these calls, they bought those calls. That's a credit spread. The put credit spread is all the way down here. It's 6375 spread by 6370. So put credit spread, call credit spread, put those together. That is referred to as an iron condor. So there's going to be many people out there that cannot explain to you why the market is having a difficult problem at this point today. This is a 0 DTE position. It expires today. I'm letting you know exactly why it's having a tough time there. For now, for my scalp traders, you might want to be watching something like that. We have this down sloping trend line. We have this kind of this line right here. Maybe a breakout gives a push and a real test there, or maybe we just break and puke. And remember, there is a high odds play down to yesterday's close. That's a popular play for day traders, scalp traders, and whatnot. Oh, brother. 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 Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. Oh, brother, oh, brother, oh, brother, oh, brother. Oh, brother, oh, brother, oh, brother, oh, brother. Oh, we were pushing that line again. I probably should have gotten in here at 400. Feels a little bit chasey right now. We popped, we pulled back. Let's see how this structure sets up. But we're also getting dangerously close to that jobs report. So maybe I shouldn't right now, just because I don't want to be involved in that initial vol that's going to hit in about 3 minutes. So you know what? I don't mind this because knowing my luck, I would have gone short there. And on the report will pop up. It'll knock me out, give me a horrible fill, and then puke anyway. So I don't mind. I truly don't mind. I've literally streamed it live to you folks of that type of stuff happening to me where I carry a position through a high volatility environment or announcement, large reaction, and it wicks me out, gives me a horrible fill, not even break even, and then it ends up breaking my way anyway. So I don't want to deal with it. I'll just wait till after. Especially that's one of the nice things of already having some profits locked in is you feel like even less pressure. That was a quick in and out play, $300, 40 accounts, 12K. 6 of that K is on an actual funded account, while the other 6K is still on an eval. Speaking of which, if you want to trade with someone else's money, lower your own risk, Take Profit Trader, currently running a great deal, 40% off. Use that code Goonie, pinned to the top of chat in the description of the video. And we should be getting this report somewhat soon here. Somewhat soon. All right, we are waiting on these guys getting going. It comes out at 10 a.m. Once again, then right here, I'll show it to you. What we are waiting on right here, Jolt's job openings, the line in the sand is 7.38 million. 7.38 million for the month of July, Jolt's job openings. We are going to get those numbers and we're going to see the market do something. It's about to do something, that's for sure. Okay. Oh, structurally, I now care about this block. Let's fill this in. Background. All right. So we were about to break down, and then at 9:49, 9:50, ending at 9:51, we got a bit of a pop. So I'm very curious which way this is going to break. Right now, things seem tilted to the downside. Let me reload this. To see if I could get a little bit of an idea. It keeps making me log in. I must have messed up my cookies or something like that. Yeah, SPY Delta is tilting, but just got a flow alert. Mag 7 is actually picking up. Interesting. Big divergence. Price is getting hit, but the options flow is actually positive on the Mag 7. So that's another good reason why. I mean, granted, if I took that trade that I was thinking about taking, I would be up money right now. I was thinking there, whatever it is. I'd be up a little bit, but That's the what it could have, should have, folks. Half the time, you have to like appreciate that. Half the time when you're like, hey, I was going to get into this, and then you look at it and you're like, oh, if I did that, I would have made money. Understand that's going to be your reaction literally half the time. The market is normally distributed. If you look at 1 minute data, 2 minute data, 3 minute, 5 minute, 10 minute, 15, 30, hour, 4 hour, it is 50-50. Half the bars in existence are red, half the bars in existence are green. If you don't believe me, go back test it. But this idea of like the Monday morning quarterbacking, you're looking at it and you're like, oh, I should have got in. Literally, you're going to have that feeling half the time. And the other half of the time, you're going to be like, thank God I did not do it. So what does that mean? How can you actually use that? That means, well, when it comes to these events, when you even have like a slight feeling of like, nah, this isn't kind of the perfect setup, don't do it then. Don't be kicking yourself thinking like, oh, if only I did that, because folks, it could be the perfect setup and you're still a good percentage of the time, it's not going to go your way. The wizard behind the curtain in this particular world of the big difference between profitable traders over the long term, over quarters and years and making millions of dollars. The big secret there is they're not really traders. They're just risk managers. The people who make the most money. Well, it was a little bit of a positive reaction. Hang on, how are we going? It just came out, and are we about to crack down? Try to initially pop, which it would have knocked me out because I would have put my risk at that point.
Good Wednesday morning. Welcome to Squawk on the Street. I'm
All
Sarah
right,
Eichen with
which way is this going to snap, folks?
9 of the New York Stock Exchange. David Faber has the morning off. As for stocks, we are regaining some momentum this morning, at least on the S&P 500, up 0.25%. The Nasdaq doing better, so tech is leading today up 0.8%. The Dow lags down.
Yeah, so that would have knocked me out.
points.
That would have knocked me out.
Treasuries,
So right there,
some
we're in a
drama overnight,
50% of the
which
case
we'll
where I'm
talk
like,
about
yeah,
the
so
long
happy
bond,
I did
but
that.
there's buying. So we've got a little bit of reversal in yields. They've calmed down. The 30-year
Pop now.
4.9%. The 2-year yield
Will
lower
this
at
actually hold though?
3.62%.
Obviously watching the intraday
Today,
high.
major clearing event for Alphabet after a court ruling helped the tech giant avoid a breakup. Top analyst Mark Mahaney tells us what is next for the company. And
Which
Treasury's
way?
Joe Livornia will give us his first
Come on,
reaction
give
to
us the
today's
jolts.
economic data. Tell us more about the Treasury's tariff plan.
7.181 versus
Plus, Fed Chair contender Chris Waller
7.39, so
speaking to
lower
CNBC
than
earlier
expected.
today. We'll get
Lower
reaction
job
from
openings than
another
expected.
Fed
The
Chair
previous
contender,
was also
Jefferies' David Zervos,
revised
right
down
here
from
at this time.
7.437 to 7.357. Shout out to Profit. Yo, Rick.
Hi, Carl. Indeed, you are watching yields move lower on the curve.
Okay,
and
so
that is
bonds are going
primarily
up.
because job openings and labor turnover, known as JOLTS, comes in on the light side, expecting a number close to 7.4 million. This is a July read. Comes in 7,181,000. That would be the smallest job openings number going all the way back to Dece of 2020. Now, if we look at factory orders for July, comes in exactly as expected at minus 1.3, which is actually the strongest number since it was positive in May at over 8%. There is a revision in the rearview. No revisions yet. Factory orders ex-trans up 0.6, also exactly as expected. Now, when we get to durable goods, these are final reads. We had mid-month reads. So minus 0.6, positive 0.6, remains positive 0.6. That was in the factory orders. Durable goods, minus 2.8, stays at minus 2.8. And what's interesting about minus 2.8 is that is a very weak number. And what we've noticed is there's a big tug of war that was going on in durables. You had minus 2.8 on our final July read. If you look at June, it was minus 9.4. That was the worst going all the way back to April of 2020. Then prior to that, you had a whopping 16.5. That was the best since 2014. So the tug of war going on with tariffs and all the issues is finally starting to settle back just a bit. Now, if you look at ex-transportation, we lost a tenth from 1.1 mid-month to 1%. And if we look at capital good orders, non-defense ex-era proxy for capital spending, it remains at 1.1%. And that's a pretty good number. That would be the best number going
Google's
back
still
to
just going.
May when it was up almost 2%. And finally, if we switch from orders to shipments, 0.7, so about 0.75%, and that's exactly where it was on the mid-month read. As I pointed out, we are now hovering around 422 in a 10-year. That would be down 4 basis points. 361 in a 2-year, that's down 3 basis points. And I know that everybody, of course, is talking about the long bond, whether it's in this country, in the UK, in Japan, because the yields are moving up. Many want to blame it on what's going on with the Fed and Lisa Cook. Listen, I've been looking at these markets a long time. It's an arbitrage with many of these other overseas 30 years. But 30-year isn't the benchmark. Look at 10 years. 10 years have been in a squashed range. Don't
NASDAQ
see any
catching a pop
movement
here.
in there based on this notion of Fed independence lost.
30-minute Orbo breakout to the upside
range
here.
on a closing basis between 420 and 433. Sarah, back to you.
Bullish breakout
Okay,
on
thanks,
NASDAQ.
Rick. We're getting some breaking news from the Fed as well. Steve Leisman's here with headlines.
What's
Morning,
this?
Steve.
Morning, Sarah. Yeah, Atlanta Fed President Raphael Bostic sounding a little hawkish, but with some give here, and I'll go through that. He sees more inflation to come from tariffs, possibly
Real breakout
over
or
many
fake
months,
breakout?
well into 2026. He believes businesses increasingly will be passing along tariff costs. So what does that mean for his policy outlook? He currently sees inflation as the bigger risk compared to weakening on the labor side. He still sees one cut this year, but he says he could pivot if the job market weakens more than expected. He does expect a slower labor market, so that's already in his forecast.
A weak job openings
one
number.
cut, but more weakening might bring him along both to more cuts
Mag
and
7
faster.
strong.
He does not
SPY
see Fed policy
weak,
as
but
very
popping ever
restrictive,
since
and he sees a vigorous
9:58.
debate on Fed policy. I'll be back at 11:25 with a full take on all the
Last
Fed speak
6
this morning.
minutes,
Quick
just
note,
up and
Sarah,
up and
if
up.
you haven't noticed already, on the JOLTS report, down 1/10 on the job openings rate, but all the other numbers, higher separation, quits, and layoffs and discharges, all those rates remain the same. So some weakening on the top line, but kind of status quo inside the number. Back to you guys.
Larger players are buying.
Thank you, Steve. Why Bostic is not a Fed chair contender, because he's more worried about the tariff inflation. So big story that everybody's watching, wondering how much to worry
Resistance
about
at
is this
45
move
and
in
50.
global bonds. I think it's worth highlighting because
Boring. All right. So we are still seeing the success. Look at that. Perfectly in the channel. Pretty much ever since market open, we've just been building out this channel on the S&P 500, while the NASDAQ is a little bit different. We kind of pushed lower here at 949, quickly popped up, quickly sold off, and then we actually popped so much off that 10 a.m. report that we are now to the top of this overall block here, this like big recovery block. So if this can hold, like we actually, it is a 30-minute Orbo breakout, like the bulls, they're controlling that. 5 minutes bullish, 10 minutes bullish, 30 minutes bullish, 4 hours still bearish. That's a little bit of a concern down here in the bottom right on the NASDAQ. But the SPY, clearly weaker. The flow, clearly weaker. Here's a look at the Mag 7 flow, which actually now, as of 10:04, is starting to flatten out. I'm not necessarily sold on chasing this quite yet. Obviously, if you were to chase it right now, your risk would probably be either this recent low or maybe you'd use like the 10:01 low. But generically, I don't think that's like if you trade it, I obviously hope you make money. But in terms of quality decisions, I really don't like this mismatch. Why is the SPY clearly showing weakness while the Qs, is this a fake out breakout or is the SPY about to break out? And as we're waiting on that, you don't have to trade it. No one's forcing you to trade it. You could just literally wait and see who is right. Is the SPY, which has lower highs and lower lows, and if you want these little carrots that denote the highs and the lows, it is free. It's on TradingView. It's called Williams Fractals. If you search Williams Fractals or Fractals, it'll come up. And it just, whatever time frame you're on, it shows all the local highs and the local lows. That is clearly trending down. Flip side, starting at 949, the NASDAQ NQ has higher highs and higher lows. Technically, that is a slight baby higher low and obviously clear higher highs. So if you took advantage of this trade, dude, have at it. Define your risk. And if you catch the new trend, I wish you the best of luck. And actually, it might start to look a little good right here. Do I want to play this on Vanquish? Vanquish Trader, Vanquish, Web Trader. Let me get into my account. Let me log in. 445. Incorrect username or password. What do you mean? I save this every time. There we go. It just made me do it twice for some reason. Do I think this is going to hold? All right. Well, let me get my order ready. Oh. Okay. Let me get it prepped up. I'm not firing it off yet, just because in case that happens. Just in case that happens. Let's see if this is a failed breakout. It's trying to get going, but I'm watching this low right here, this 10.06 low. And the reason why I was hesitant is seemingly over the past 3 or 4 weeks, and for those of you who tune in commonly, you've kind of experienced this. It's like somewhere between 10 and 10.15, there is just seemingly so many reversals. Like whatever we're doing that day, it seems that the market has this like weird fascination with between 10 and 10.15 of just completely reversing it and making things look good and screwing people over. So because of that, and it's not like we see it every day, but it seems like we see it enough that from a risk reward perspective, I don't mind sitting out a little bit more just to make sure I'm like confident with what's going on, just because this did get smacked here, but it's seemingly, well, it tried to break, then it got smacked. I don't know who's going to win this. And then the Nasdaq is clearly showing strength, but I will get concerned if it breaks down below this low, because all of a sudden we have this pattern of higher highs and higher lows. But if it takes this out, obviously that might be suggesting something new. Might be suggesting something new. Where do we have these guys at? There's sellers at 52, 54. There's some buyers here at 30. These were the buyers at whatever price, 26. Oh, brother. Oh, brother. Oh, brother. Oh, mother. Oh, brother. Oh, brother. Oh, mother. All right. Hang on. Let me get ready. Let's get ready. Let's get ready. Let's get ready. Do I need to be doing anything? Look at that. We dump perfectly, come right all the way back. Job openings, actual 7.181, estimate 7.4, prior 7.437. So weaker job openings, the market liking it thus far. And I'm saying thus far because remember how last Friday when we got the PCE report at expectations, at first the market did also like it. And then by the end of the day, everyone's like, hey, what happened to that good inflation report? So thus far, it's holding. We have not seen fresh lows yet. But obviously, I am watching the 10.06 low on the Qs and the SPY for a potential reversal. But right now, in the shortest of time frames, post this 10 a.m. announcement, the bulls are gaining a little bit of traction. But it seems as if past 10.07, they're losing a little bit of their enthusiasm. The Mag 7 is actually starting to sell. That's freaking me out a little bit. The SPY is just flat here. 5-minute questionable, 10-minute questionable, 30-minute bullish, 4-hour bearish. 5-minute bullish, 10-minute bullish, 30-minute saving itself, 4-hour actually bearish here. You don't say. Oh.
Order submitted.
All right, I have a pending order on my eval accounts.
Order submitted. Target filled.
All right, just did a little bit of a scalp breakdown. These are all now up to 400. I just did that on the evals. I didn't do that on the performance ones. That's why they're up an extra $100. Here was the trade right there. I took this breakdown trade. Didn't get the best fill. I wanted to target the recent one. That didn't work the best. But anyway. But any hoozle. So I just did that on half the accounts. And I could be... Oh, fuck. That's getting hit. Oh, God. Oh, God. Oh, God. Oh, God. Oh, God. Oh, God. How do you clear data? Oh, God. What should I be doing? What would be, if I were cosplaying, all right, buy buy to open. I'm doing this on the right account. That's the 500. Man, my initial trade, if I just held that, I was short at 32. We're already 50 points below that. All right, I currently have no position. The SPY just made a fresh low. That was clearly the fake out. I need to be patient for my next entry here. I need to be patient for this next entry. The Mag 7 taking a decent size hit from 1008 till now. The SPY definitely taking a decent size hit, but has not made a fresh delta low. Let's see how big this recovery is. This is kind of messy looking. Let me switch it over to this. You can see it a little bit better. Not much of one, that's for darn sure. We're back to 400, that key level of the morning where we were just dancing around that quite a bit. And it also happens to be VWAP. So is this the actual breakdown trade?
Order submitted.
Okay, 88, 98, 08. That's going to tap me out right away. Fuck. I think I was a little too early. This is going to be a bummer because I think I'm right on this trade.
Order submitted.
Yeah, I think I'm a little early. Fuck.
Order filled.
I had to protect it. All right, so from up 300 to down 300, I did obviously give some back there, but I was waiting for this because I waited for the vomit, I waited for the first bounce, and then we just didn't get that follow through, which is obviously a bummer, but you have to protect it just because, remember, there is a non-zero chance that we rip all the way back up, and if we rip all the way back up, that's how you lose an account if you don't respect it. So I tried to, I didn't want to chase it down, down, down. Then we popped. When I saw some weakness here, I wanted to get into that, but obviously the market had a slightly different idea. And it was just a stronger bounce off of VWAP than I anticipated. Fuck. All right. Let's see if I can make this back. Let's see if I can make this back. We'll see. We'll see. Currently, no position. Oh, I can't. I could have given it a little bit more room. If I go short here at 400, that's 14, so that's 28 points. That's another 500. Do I really want to risk going down 800 on the day? If this were to break down at 400, my risk is this high, 14 points. That's 28 if I trade 2 contracts, so that's going to be $550 on top of a $400 loss. So I'll be down 900. We'll see how this one plays out here. I feel strongly this trade is going to end up, in hindsight, being a fine trade. It was a little bit too early for the heat that I was willing to take, especially on a fresh account. If I had a little bit more leeway, I think I would have liked it, but just basically what had happened seemingly is I was trying to play not only the structural breakdown, but also the VWAP breakdown, and then just like that, the VWAP ended up bouncing. That's maybe something I should be paying closer attention to. Not this trend line, but this trend line might be worthwhile. What's this trend line looking like? Oops. Well, that's a very good example of why I got the fuck out, because I would have lost my accounts. A very good example right there. I would have been blown out. So did I get in? I gave myself a shot. It tacked me out. I was using the recent high. It got me out. I don't mind that at all, because if I were still in, I don't know if the accounts would have been like completely gone, but like they would be down really, really bad. So this right here is another good example. Generically, half the time you trade, you're going to be right. Half the time you trade, you're going to be wrong. Like that should be your base assumption. Like this idea of someone out there just trading right and right and the right and the right and the right and the right. It just does not work like that. That is not how trading functions. That's just simply not what it is. So don't get caught into that trap of thinking that somehow that's real. Like it's real exclusively in the world of social media, and it does not exist anywhere else. It really, really doesn't. When the best traders in the entire world, people managing billions and billions of dollars, they're the people who run Wall Street, when they're right between 40 and 60% of the time, to think that there's some retail trader who's like way, way better, even though they're a retail trader, and like somehow eclipsing all of Wall Street, it just doesn't make sense. It doesn't make sense. You should assume, your base assumption, especially when you're getting started, is that you're going to be right 40 to 60% of the time, roughly 50-50. So for you to be profitable, that's when you have to be in control of your risk and let your winners ride. Obviously, if you're right half the time and wrong half the time, you're break even if your risk and your reward are the same. But all of a sudden, if you're letting your reward run and you're riding a trend and keeping your risk really tight, well, okay, you could do it. And then there's other ways you could do it too. Like, let's say you do start to push being right 60 or 70% of the time. Well, a model to make that work is asymmetric the other way, where maybe you're only going for $100 of profit, but risking $5. Well, if you're right upwards of 85, 90% of the time, that could still work. So it's all about, it's never exclusively how often you're right, and it's never exclusively how big your wins or your losses are. It's all about how often you're right multiplied by your average win size. Then you take away how often you're wrong, multiplied by your average loss size. That is your expected value. If that equation ends up being positive, great, you're a profitable trader. If that equation ends up being negative, well, you should work on it, because that means you're like net losing as a trader. So I think a lot of people, especially in social media, they just try to focus on one or the other. Like, look how often I'm right. Okay, that doesn't really tell us anything. Or they're like, look at this trade. It's like, okay, you might have one big winning trade, but what if you have like a lot of even larger losing trades? So there's that equation, people like to just focus on half of it when you need the other half to figure out what the hell is going on. I am 100% wrong today. Well, statistically, that means you're maybe close to being right. Oh, what do I want to do here? Speaking of which, can I make any smart decisions? The SPY starting at 10.15, big pop. Mag 7 starting at 10.16, kind of recovering to how it was earlier today. Thus far, ever since 9.50, the Qs do have higher highs and higher lows. The SPY has a higher high and a lower low. Hate that pattern. If you're looking at the 1 minute from 10 a.m. till now on the SPY, it is the worst pattern. You have fresh highs and fresh lows. So if you have higher highs right here, this high compared to the last high, and a lower low compared to the last low, how do you know which way to play it? You don't know the trend. You don't know who's in control. At one point, like right here, you see at 10:12, a big dump that then was just quickly bought right back. Like you just have kind of these dead zones of low amount of trades, low volatility. You don't know if support's there, resistance. So like, if you're playing it, I wish you good luck, obviously, but I feel more bad for you, like me, if you took this short and then just got completely reverted on us. That is obviously, that's a tough beat right there, but that happens. Like weird shit happens in the market. As much as people want it to be like this thing that can be solved and like the answer is just so evident, and this is always the nice way we trend, a lot of the times, like especially when people are doing like their Monday morning quarterbacking bullshit, it is a lot of choppy fucking mess. It's a lot of choppy mess. Trust me, bro, 100%. Who's trusting who? You're saying it's the trust me bro attitude? Yeah. I mean, you're going to see that in the market all the time. The amount of like just, I don't know. When you're on my side of the camera, eventually you end up being in the community of other like content creators and influencers, as much as I hate that word. And you very, very rapidly realize that a lot of these people who you think are like good traders and they talk about it all the time and they show this off, that off, it's not just that they're lying. They're 100% lying. There are many, many people who I've personally met or have seen secondary like information of that they are just straight up lying to everyone. Like it's all doctored. It's all, let's only show the good trades and the good accounts and hide everything else. It's all a giant marketing thing rather than like legitimate trading. And it happens far, like obviously you guys have a functioning brainstem. So you probably, you're like, yeah, no, my base assumption is that happens. What I'm saying is on my side of it, it happens way more than you would possibly imagine. Way more than you would possibly imagine. And it's sad. It really is sad because in a certain way, you're kind of taking advantage of people who they're probably most likely like on financial hardship. That's why they turn to trading. It's like an opportunity to improve their financial health. And then I feel like because of that, a lot of people have certain blinders on, and what generally in your normal world might seem weird, well, you don't want it to be off because you want this opportunity for you to wait. So there's a lot of smart people who end up falling for this bullshit because of that. They just like, they very much need it to work. They want it to work. They're putting in a lot of effort to make it work. And then, I don't know, years later, they realized that they were basically just fucking scammed. Which is actually how I got started in the world of penny stocks. Fun story about Matt. That's how I got fucked in the world of penny stocks. Which, to clarify, if you're a penny stock trader, you actually can make a lot of money. But what they don't tell you about penny stock trading is the best way to really approach the penny stock world, which, to clarify, I don't do anymore, is just shorting. Penny stocks, remember, it's a game of odds. And every once in a while, if you're playing roulette, yes, green does hit and you make a huge return. So that's like the equivalent of penny stocks of going long and seeing if you can find the diamond in the rough. But most of the time, green does not hit. And when you see these random pops, they all end up back at zero. That's just the odds of the penny stock world. There's a reason they're a penny stock. There's a reason they're a penny stock. They're penny stocks because they're just dog shit, dude. They're absolute dog shit. How much did you lose on DRYS? I know you had been in it back then. I've literally never heard of DRYS in my life. I think you're confusing me with someone else. In fact, I know you're confusing me with someone else. I've never heard of that ticker, seen that ticker. I couldn't even tell you the realm of business that ticker is involved in. I haven't traded penny stocks in years. Man, that Ross guy at Warrior Trading is a beast. I don't know if you'd have that opinion if you've heard what I've heard, if you've seen what I've seen. Matt, why did you steal a hat from a kid in New York open this past weekend? Not cool. Hey, it's a dog-eat-dog world. That kid deserved it. He'll now learn a life lesson. Oddly enough, when I don't know if you guys saw it, but some kid at the tennis match, there was like older gentleman, like a dad-esque figure, and this little kid, and the tennis player was trying to give the kid his hat, and the guy just grabbed it. And I think that kid was taught the best lesson he'll ever learn in his life. I'm on the old guy side. I really am. I think that kid, is he out one hat? Yes, without a doubt. That's sad. Whatever. Cry about it. But on the flip side, he'll learn a lesson that is invaluable. He will. I think that guy, I think he's a businessman from, where is he from? I think Poland. I think he just learned one of the best lessons in his entire life. Wow, look at that. We ran right up to the Captain Condor and got smacked. Will it have legs, or are we going to take out these recent lows? This is what I care about right now. I care about this breakdown and I care about this trading block. Does this trading block hold or not on SPX? So basically, we made a fresh low here at 10.15, popped all the way back up, and we're now running back into the Captain Condor issue. A lot of positive gamma. It is still there. Well, it's 1,000 less. It was 10,000 early this morning. This one's way bigger. The put credit spread has doubled in size since the market opened. Actually, no, is that a new one? Oh, that's a new one. Sorry, scratch that. Whole new play at 6,395. So that means if we get down to 6,400, probably pretty good odds of a bounce, most likely. Because technical level, psychological level, and now you have a ton of positive gamma right there. And so that's actually a whole new position. When did that get created? It got created at 9:50. Got created at 9:50. Order submitted.
Order filled.
Order filled. All right, so my big accounts are doing better, up 500. Up 500 on the Robo Icarus, while my manual trading is down 400. Not so good there, Tonto. Not so good there. So that was an easy play. I mean, that was that breakdown trade right there, that was so comically easy. Comically easy. Runs up to resistance, structure breaks down, puts in a local high, play it for a little scalp, move on with your life. Now let's see what's going on. All right, let's see if we break down. So we took this low out. So now we're in this weird situation where we still have higher highs and lower lows. So it's tough to identify the actual trend today. Look at this on the 1 minute. It's just all over the fucking place. The cues are a little bit more clearly an uptrend, but you never know how long that's going to last. You never know. All right, let's drop it to the 3 minute just so things are maybe a little bit more lucid, a little bit more clear. Another piece of weird information on the day is the fact that the SPY had its 30-minute orbo broken to the downside, i.e. bearish, while the Qs, the NASDAQ, had its 30-minute orbo broken to the upside, i.e. bullish. So we're already seeing conflicting information, or we're seeing a continuation of conflicting information between the S&P 500 and the NASDAQ. But with that being said, they're fighting back hard right now. They're fighting back here. Look at that. Someone tried to dump it, and it's being bought right back up. Right back up. What the fuck? Huh. Who would have thunk? Who would have thunk? Look at that. That's a fucking fake out and a half. The Mag 7 pretty long and strong. This doesn't seem to be updating properly. Oh, wait, no, it's because I'm not at the right time. Sorry. Here we go. That's on me. Yeah, we're running right up to this node at 50. I'm really curious if this is going to break or not. There's definitely one Discord in this world that's clenching its cheeks a little bit tight this morning, because if this breaks, it's going to cost someone a pretty penny as this position blows out. But then there is another one all the way up here at 64.80 and another one at 64.70. So a lot of positive gamma. If that breaks, you're talking 64.70. If that breaks, you're talking 64.80. Once again, some bullish targets on the SPX. What the fuck chart is this, dude? Look at that dumbass chart. All right, I'm watching this upsloping trend line, and just in case, like right here, resistance all day. Maybe it breaks, maybe it doesn't. I don't know. Your guess is as good as mine. If you took this long opportunity here at 10:31, risking the recent low from 2 minutes prior, hey, I don't hate it. You have well-defined risk. Your reward could be a little bit better. It's maybe if you took it right there, it's about a 1-to-1. Maybe it's a little bit more favorable on the reward side. You could scale out at 45, and then maybe you have some runners in case it breaks. I don't hate that trade. I don't. You're playing the recent trend. If anything, you're really playing more of the optimism that we are currently seeing in the NASDAQ rather than the actual SPY itself. Hang on. Let's get some of these trend lines going right there. Oh, what do we? Yeah, some nice higher highs and some nice higher lows. Yeah, the NASDAQ is definitely leading us up. The Mag 7 did get a nice pop till 1030, going a little bit flat right now. Does it have any follow through whatsoever? Maybe yes, maybe no. I don't know. No one, I'm telling you, I promise you, no one on this planet can definitively tell you if you're breaking out or not, unless you're the billionaire who's about to buy. But beyond that, no one in the retail space can definitively tell you, will this be a breakout or not? A more fair judgment of this situation is saying, hey, folks, this is a pretty important fucking level. Pay attention, because if it breaks out, the bulls might gain control. If it gets rejected, we might be revisiting some recent lows, maybe the intraday low. No one can, that's the game of trying to predict. Will it break out or not? Predicting is how you lose money. Reacting is how you make money, and more importantly, it's how you protect the money you've already made. Reacting in active trading is far more useful, far more important, and far more profitable than predicting. If you are sitting there right now trying to predict a breakout or rejection, you're already way behind. What you should do is sit there patiently and wait for either the breakout to be confirmed or the rejection to be confirmed, and then play that if you like the risk reward setup. It's that simple. That simple. Maybe you and traders like you because the chart like that. Mind blown. I don't know what that means. Hey, Matt, have you heard of trading fraternity? I only ask because you seem to have a knack which traders are outright bullshitting. I've heard of trading fraternity, but I haven't really have a developed opinion or anything, because I believe that show happens during my show, and inherently any other financial live streaming or commentator, that type of stuff, if it happens during my show, the chance of me also being able to consume it is very, very low. So nothing good to say, nothing bad to say. And to be completely honest, I haven't heard anything. I think the one thing that I've heard about trading fraternity is the voice of the guy running trading fraternity. And it sounds like he has a pretty cool voice. So that's neat, I guess. But unfortunately, I have no particular insights. I can't make a self-assessment because I haven't consumed any of the content. And through the rumor mill, the grapevine of content creation, I've not heard anything good or bad. So I would say the jury's out, but I don't know, I do be optimistic that I hope he's good. I mean, I never it's not like I get joy when it turns out these people are scumbags, because I know other people are attempting to learn from them, and most likely that means they're learning money or losing money. So I very much hope that he's crushing it. I hope he's given phenomenal information. But on the internet at large, there's a lot of people who are full of shit. A lot of people who are completely full of shit. Payout approved. I'm just looking very quickly to see if we're missing any important information. What is this one? Who said politicians don't get rich? Ilhan Omar just reported her net worth is now up to $30 million. That's a 66,000+% return since she was elected back in 2019. Nothing like when she joined, she was in debt 50K, 40K, something like that. And now that she's worth, that's fucking crazy. She's now worth $30 million. What a fucking scumbag. What's weird is about Omar's wealth is she appears to be following the Pelosi playbook. Pelosi's husband also was a venture capitalist. Nancy Pelosi also owned a winery in California. I'm sure it's just a coincidence, though. What a scumbag. There is no way you are just naturally trading your way from debt to 30 million without non-disclosed payoffs, shit like that. There's no fucking way. Net worth has reportedly increased to as much as 30 million, primarily due to the success of her husband's businesses, including a winery and venture capital firm. This marks a significant rise from the previous disclosures, where she claimed to have much less wealth. It's sad. So it's not just on the influencer level. Apparently, it's on the political level. So there is also that. Oh, no matter where you look in the world, folks, people are trying to take advantage of the system around them. All right. Are we breaking down here? Are we breaking out or breaking down? I'm watching the SPY as closely as I can. Is this going to be reverted? Are we running into Captain Condor or not? Are we running into Captain Condor or not? Breakout or breakdown? We're testing. We're testing the closing value. No, not the closing value. Just, the top end of Captain Condor, not the closing value. Closing value is down at 6416. But we are battling it out. Once again, if you don't know what I'm talking about with Captain Condor, we're talking about this large call credit spread that we are testing the short leg pretty much as we speak, about 9,000 shares. And if this player gets blown out, probably going to see 6470. 6470. But just because I think it's this important, across the internet, you're going to find people in one way or another trying to sell you snake oil of, my model predicts breakouts or breakdowns. It's like, if it fucking did, you'd be rich and you wouldn't be selling the model. You'd be a billionaire on a yacht sipping your pina coladas. You wouldn't be fucking talking to your 8 followers guaranteeing it. It's just not how it works. And I get it. I was there too. I, at one point, was new to the world of trading, and you have all these people, and you just, generally in life, if you live a normal life, the people you're surrounded by aren't just like horrific liars making up shit all of the time. So when you first join the world of trading, it would be an abnormal thing to assume that the people who are like all over the place marketing are also scumbag liars. But so much of this world is people selling snake oil, and this idea of like, I'm predicting breakouts, I'm predicting breakdowns. The fuck they are. The fuck they are. What's the high low? And these little carrot things, they're called fractals. If you just search this indicator, fractals or Williams fractals, it's free. It's a free indicator. And it like all it does is it's a quick little visual tool, and it just paints the recent highs and the recent lows for you. So rather than like eyeing it up, and it's just, it makes it easier. Generically, you could see that they're trending down. Generically, you could see that they're trending up. Same thing with the lows. Generically trending down. Something switched at 10:15. Now generically trending up. It's just that. It's free. Fractals. It's on TradingView. Anyone with TradingView, you have access to it. It's just a nice little visual tool. Nice little visual tool. The Qs are going. The SPY is going. Golly gee willikers. Good thing I never bought those puts, because they would have been blown out. That would have been less than ideal. It is 10:41. It is 10:41. Do you know where your kids are? Pretty strong uptrend in the NASDAQ. Same thing ever since 10:15, 10:14 in the S&P 500 as well. The Mag 7 flow is definitely agreeing with it. And then the S&P 500 is also now agreeing with it, starting at 10:17. Nice flow to the upside. And if anything, this was a little bit telegraphed by the fact that the big buyers have been clearly, having a good day today, because they are, since market open, they are pushing long. Very much since market open. I'm just wondering, will this hold? This is why I keep coming back to this particular screen. Will the Captain Condor level hold, or is it going to go bust? Hold or bust? Hold or bust? Let's see. That's some strong flow. Running into a little bit of an issue right here, which also simultaneously happens to be 23,500 on NQ, so another psychological level. Yeah, we're right at 500 on NQ. So putting this together with the Captain Condor, no one would be surprised if we actually got rejected here. But guess what? Your other option is a legit breakout. Of course, I wish I played this to the upside. Of course, I wish I did. But remember when I was short at 400 and got out at like 415? Well, those accounts would have been blown out multiple times over. So that is a very, very good, sobering reminder of you have to respect your risk. Bullish, 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 bullish. Fuck me. I think I need to ditch. Hang on. I need to look at some of my swing plays. I'm getting alerts popping off that suggest I might, in fact, be fucked. Yeah, I have to. I have to. It's all about that downside protection, baby. It's all about that downside protection. It's all about that downside protection. Let me update the Discord really quick. Where are we in Swingers? This is a particularly frustrating one. I had puts that were looking really good and I just had to get out on the upside gap fill in the continuation. But it's a bummer because looking at the options flow, no one's going to be surprised if this dumps in a day or two. Like, it's just the amount of larger positioning. It's actually crazy. But it just is what it is. Like, you have to stick to your risk because, once again, you always have, I think it's good to train yourself to think about, but like, what if on the off chance, like XYZ, like what if on the off chance we just fucking skyrocket from here, snap this trend line and like just get going? Like, you just don't know. So you kind of have to always be like paranoid and think about like the worst case situation. It's just like what you have to do. And as it's obviously a huge bummer to like admit you're wrong, but what's better than that, like, or what's worse than that is blowing out your account. So I'd rather admit you're wrong and move on with your life rather than sitting there and getting absolutely murked. At least in my humble opinion, that's a better combination. But yeah, we're at 50 right now. I'm still watching this for a potential reversal, but look, like that's just really hard to argue with today. That's a lot of positive delta in the S&P 500, in the Mag 7, in the Nasdaq. That's difficult to argue with. It really is. Bullish, 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 and now even the 4 hour starting to push. And then right here, bullish, 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 and now the 4 hours actually back above. Back above. All right, so we'll set up some alerts there. Set up some alerts here. And then just bring our attention back to this. 50 is another psychological level. Obviously, Captain Condor is structured at 6,445, but 50 is an important one as well. People probably reacting to it. If I had to guess, wouldn't be the most insane thing if people take a bit of their profits. We can track that in real time by right here. The green is 0 DTE calls. Clearly at 10:15, someone started buying like no other. And then at 10:45, so a half hour later, they're taking some profits. Huh.
Order submitted.
I was waiting for the first higher low, and sorry, I went silent on you there for a second because I looked over and I was like, oh, fuck, there's a higher low right there. That I just wanted something that I could reasonably base my risk off of within 20 points, and this was about 20 points rather than like the 50 or 60 point opportunities that I was seeing earlier today. So hopefully we can get this push up to the first one. that would wipe out my locked in realized loss on the day. And then the second one would be a runner, which ideally would be a nice fat profit on the day. But who knows? Maybe it happens. Maybe it does not. Maybe it happens. Maybe it does not.
Order submitted.
22. I'm in at 13. Oh, we'll see how this one goes. A push of 30, I might move the stop to break even. A push of 30. What are we at? 20? How's this looking? We have some people trying to sell at 26. Some people attempting to sell at 26 right here where my cursor is. Let's see how it reacts
Order
there.
filled.
All right. The Icarus just locked in again. This is now up to 660 on the day, the evals. And then obviously I'm still riding the ones that I'm manually trading. So basically out of my 40 accounts, I have 20 PAs, 20 evals, and 20 evals. I mean, so half and half. I'm manually trading the performance accounts and I'm letting the robo guy trade the accounts, the 150 accounts that are all eval still. So those are looking good. Those are up 660 on the day. I'll probably turn the robot off. I might turn it off now. I also might turn it off if it hits $1,000, something like that. I don't know. I need to make a decision there. But this doesn't feel so good. Is it going to get rejected at 20? Just trying to trade with the trend. Basically hoping that all those 0 DTE call guys don't get, like, I don't know, stomped out here. I'm liking that flow. I'm liking that flow. I'm liking the Orbo breakout and the hour breakout. Clear that. 55. Oh. Create order. Cool. 660. How much do I actually need this one to go up by? 667. I'm in at 660, 720. Okay. All right. We'll see how this one goes. Doing this right here is Vanquish. It's sim to funded trading for options. While when you see this over here, this is sim to funded trading for futures. Oh, okay. Interesting opportunity. Interesting opportunity.
Order submitted.
Interesting opportunity.
Order filled.
Robo hit again at 7. Now, dude, this just keeps climbing like no other. Jesus Christ. Maybe I should just turn the robot on for everything. That's up to 786. Robo's rocking it while Mateo's brain is not. Actually, almost back to break even. Well, I was for a second. Part of me is thinking even front running it and moving the stop to break even now, just to stop digging myself into a hole. But I do have a bit more of a buffer. Fuck. I don't know. I'm torn. I'm torn on this one. Oh, that ran into... There's quite a bit of sellers at 26, 78, and 30. But if we could break that out, it might really be able to go. That's a big if, though, especially when my position... I'm thinking about moving my stop to break even right now because then I could just cap it. I could cap my loss at 400. That's just not that much breathing room. It's going to come back to like a pure luck play of like, does it just not revert and it quickly pops all the way up? I should clarify that in the event that this first one's hit, I'm definitively moving my stop to break even at that point. Definitively. Come on. Can't I just... 25, 35. It's just... this is where it's having the issue. There's quite a few sellers at 26 and now 30. Remember, the heat map above, these are passive sitting sell orders, and then the heat map below is passive sitting buy orders. And we just look at this chunk right here across the line, starting all the way back at like 1047 till now. Someone's been trying to unload a good chunk of NQ contracts at 526. And thus far, there's just not enough buying aggression to push it above. Just not enough buying aggression to push it above. Fuck, I'm back down to break even on mine. What's happening over here? That did not get its fill. What's happened? Oh, is it taking a quick dip back down to 50 to 50 to 45? Fuck me. Oh, I don't know what to do with my risk. Well, I could use this low or I could use this low. Those are pretty much my two options. I'm kind of kicking myself now, wishing I did the break-even trade because I'm just running out of buffer. Honestly, on the 50K accounts, the buffer is very difficult to deal with just because like the natural movement, like the ATR and the vol of NQ, you could either make or lose that very, very rapidly. And I'm basically praying that this is a higher low right here or I am shit out of luck. I'm basically praying buyer step in at 500 or your boy's fucked. Come on, can I get lucky? Can I get lucky? Can I get lucky? Can I get lucky? Can I get lucky?
Order submitted.
Robot took the reversal and then got smacked right there. That's probably not so good. Robo Boy went long on this, the open of this bar at 1055. That's what that other trade was that you just heard. Basically waited for the sell-off on the reversal, closed above the previous high, went long, trying to go for a little scalp. It might hit it. It's trying to dump it at 514. But it might have got caught up. I'm watching it to see if it's caught up in a trend reversal, if this is a lower high. Basically, what the robot played just now was the confirmation of a higher low. Right here, this high, or excuse me, this 1054 low is higher than the previous one. So on the first close above the previous high, it went long. So from like a theoretical standpoint, that actually sounds pretty good. But generally, it's nice when it hits it right away and it's not pending in the trade. But maybe it'll get lucky. I've been in this trade for a minute and I'm finding it to be uniquely painful. Maybe a little bit of a trend line break here. Come on, fuck. It's just wicking it. 1, 2, 3, 4, 5. Yeah, it's running in. Clearly someone is selling with some size right here at 10. I guess they're market orders because we're not seeing there, but it just perfectly kept getting wicked. But you'd think it could push to 16 because that's the next real seller without much of an issue. And then back up to 26 if there's follow through above 15, 16. But this is the fourth or fifth. Oh, I was going to say,
filled.
all right. The robot hit again, up 900 on the day. And then yet I'm trading here down. Like, fuck me. Oh, I don't know if there's anything more frustrating in the world of trading where you try to manually pull something off and then like basic strategies just work and you make all that money. Oh, it's so frustrating. So incredibly frustrating. I don't know, all those times that you think you could be smarter than a robot and then you're not, makes you feel uniquely stupid. But hey, maybe that's just me. Maybe that's just me. Come on, just give me that break and that rip. Let's get that break, get that rip. Running into some issues there, but the real sellers are seemingly lining up at 25-26 for anyone who's attempting to play this recovery here. Speaking of which, how are we looking? That's the higher low. All right. Piper did fire. What is today? The third. Oh. The third. Right? Yeah, it is the third. Okay, if you're in the Discord, I updated swingers, basically went flat, and then also Piper just fired, so a little bit of a intraday directional bias. Dude, Tesla is going. 328 up to 341. Wow. How am I still down on that? That's a bit of a bummer. All right, in the very short term, this lack of follow through right now is making me a bit concerned about my own futures position. Come on, just get it. I don't always agree with you, LOL, but I've learned so much over the last few years watching your show. I just wanted to say thank you. That's so incredibly nice. I appreciate that, Paul. Well, yeah, no. Are there really two people on this planet that agree on everything? I think that's healthy. I think we all have our different experiences and opinions and frameworks through which we view life. I don't think you have to agree. Shout out. I'm happy you learned something. I'm happy you found some value in this, because at the end of the day, that's why we do it. That's why, oh, fuck. Oh, do I just want to fucking take this loss? Oh, a little bit of a consolidation flag breakout here that's not going the way I need it to. Vibes, not the best at the moment. Vibes are not vibing for me. Yep, not vibing. And I honestly don't even hate the play. Like, I mean, I think there's sometimes you throw on a play and you're like, oh, I know that was the wrong play, and you're just kind of being greedy. But this time around, like, higher highs, higher lows. That is bullish. Looking at the flow, that is a lot of flow on the Mag 7, a lot of flow on the S&P 500. A lot of flow on the NASDAQ. I mean, granted, it's going flat right now, but overall, the trend is up. Looking at the big players on the day, they are net buyers. Like, I feel looking at momentum, bullish. Like, across the board, I strongly feel that I'm on the right play. It's just sometimes there's the unfortunate timing aspect, and maybe you got in before like the next follow through. Like, I don't feel like I'm doing one of those silly things where like I'm fighting trend. I don't think I am, at least. But maybe. I'm hoping that this can just double. I just needed this back above 16. Some buyers are sitting there at 95, so I like that. Bot's going to go long again, potentially for the last time on the day, depending on where this bar closes. If it can close above, especially above the EMAs. Oh. Yep.
Order submitted.
It just went long. For that, once again, to clarify with the bot, that it's scalping right now. Just, I don't want anyone to interpret it like, oh, the bot went long, so I'm just going to hold for the next half hour. No, it's trying to get in and get out on short-term trend reversals back in phase with the larger trend. So basically right here, it has a higher low. First bar closed above the previous high. It went long. It's long at, it got to fill at 10. It's actually, oddly enough, trying to get out where my other position is based. It's this guy up here. So basically, the logic of it, just to talk about it as it's playing out, is in the short term, 500 tick, it's waiting for a bearish trend to go back in trend with the bullish trend, as in a trend reversal from bearish to bullish, because it's identified the larger trend as bullish. So it's waiting for a short-term pullback so it doesn't buy at the tops or anything like that. And then it's betting on a continuation of the larger trend. And technically the time is fine. It's only 11. It weakens at lunch, basically from my back testing on that strategy. It should definitely be turned off between 12 and like 1:30, 12 and 2. So the timing's not bad. But it kind of comes down to risk management. Like, it's just, can you like sidestep the bad beats? And this one, I don't really mind it that much because 500 should theoretically be support, but hey, sometimes support snaps. But I just need a little bit of a push. There is people trying to sell at 20, 22, 25, 26. So there's definitely some sellers up here at the intraday high on NQ. But the bot isn't too worried about that because it's going to take its profits before then anyway. Or it should. Come on. This consolidation is freaking me out. I'm not liking it. Not a fan. Look at that consolidation. Yeah, we're just going sideways. Come on, break out. You can do it. We need to turn up the vibes, you know? You got to turn up the vibes. We got to, come on. Break out for the boys. There we go. $1,000 per account. Which brings up the very fair question of, Matt, if you has a system that trades for you and can make $1,000 a day, why the fuck are you manually trading? And to that, mon frere, I would say that's a really good fucking question. Why am I doing what I'm doing? You bring up a very, very valid, fair, understandable question. Why do I put myself through fucking hell when I already have shit that does this? I don't know. And this is one of the first days in quite a while that it's uniquely painful because I have so many accounts because of the 90% off to see the numbers compared to each other. It's one thing in the back of your mind where you're testing it and you're like, oh, I know that does well. Sometimes you manually trade and whether you do well or don't do well. That's frustrating. But then to see the numbers right by each other, half the accounts I let Icarus trade, the other half I'm manually trading. Icarus locked in 1,000, no more sweat. I could turn it off on the day, locked in 20 G's. Then my manual fucking trading is somehow down $600 per account unrealized right now. Like, it's just because the bot trading does not make a person a trader. I don't give a fuck then about being a trader. I personally in no way have a desire to be labeled a trader. I just want the money in my bank account to go up. If you call me a trader, cool. If you call me a bot portfolio system manager, cool. If you call me like fat fucking Barney, I don't care. I don't care what my title is at all. If you call me a content creator, a streamer, a trader, I don't care. All I care about is the money in my bank account going up. So you could call it what you want to call it. It truly does not matter to me. I don't give a fuck. I do it to support my Coke addiction. Well, you might not have to trade then if you drop that habit. Magic internet monies. Oh, that's the 10-minute. That's the 5,000. That's the 10-minute. That's the 1 minute. The 1 minute looks weak below 80. Uh-oh. Uh-oh, SpaghettiOs. Your boy's getting to the danger zone. Holy shit. It almost, it's coming for me. Stay away. Stranger danger.
Order
yeah,
fill.
Locked in. Fuck that, dude. Fuck that, dude. So the 500 is actually breaking down there. The 1 minute has not broken down quite yet. We're still above VWAP. Dude, if that's just enough to fucking tag me out, it was too. Look at, I just got wicked out there for it to bounce back up to 500. I try to use the 500 as the defense. And I'm really just kicking myself because half hour ago, you guys saw that I had the opportunity to get out or to at least be break even and then just not risk anything. And then I could have reevaluated this. Motherfucker. Of course, that's how it has to go. Would you have expected any? Honestly, when you guys saw it coming from me, did you expect anything else? Did you guys truly deep down in your soul expect anything else to happen besides the fact that I would get stopped out and then it would rip right away? There's no way. There's no way deep down in your soul you thought something else would be occurring today. You're like, nope, that's it. That's how it has to go. You knew it. You knew it. I knew it. We all knew it. Full port long. It's getting to that point in the day, isn't it? When we full port long. Right at that trend line now. Motherfucker. Motherfucker, dude. What's that high? 25. That's 15 points. They're still buying. I want to do my sanity check. We had big support down there at whatever the fuck it was, 85-ish. We have resistance here at 15. That breaks out. Push to 20, 23, 25. A little bit of a little trend line rejection right there. I have to admit, uniquely painful. Market makers are watching your stream. It's not your fault. Yeah, it's the market makers. It's all those darn dark pools, you know? Dark pools, dark pools, dark pools. It's never my fault. It's someone else's. That's the sign of a good trader, when you can identify it being someone else's fault rather than your own. That's how you know you're really onto something. That's how you know you're really onto something. Oh, we broke up. We just double bottomed right there off this range. Do I take my last trade with you, folks? Do I risk blowing out these 50K accounts? It's so difficult to trade two contracts. It really is. Do I do it? Do I let you guys witness the death of my accounts? Could be fun. Could be a fun show. Fuck it. We're going long 3, baby.
Order submitted.
These are going to blow out so quickly. I really like... It's so incredibly difficult to trade multiple accounts when you have a 50K account just because your drawdown is so minimal. so minimal. You basically, that's why I'm really running the robot on these guys over here, just because I want it to do small basic stuff, nothing like too crazy. I just want to like solidify that. I feel like I have like a fighting chance. When you have, it's one thing with 2.5k drawdown, which is nice. Like Apex is generous in that sense, but it's 2.5 unrealized, and that's the bitch. Is like, yeah, these are about to go. Well, you guys told me to rip it long, full port long. This is what happens. Dude, it's so frustrating. Just stick to the strategies. I have the strategies. They work. I have the data that, yep, there they go. I have the data that proves it right there. Boom. Like, just to see them side by side, it's like the most fucking frustrating thing. Just a side by side comparison of that. Like, golly, dude. Well, that breakout failed. I wonder if this is going to hold or if we're turning here. You could trade micros. That's a fair one. You could handle the scaling properly because it would be the same system. You just fire it off on the micros and you scale it accordingly. So instead of whatever, like you could do that. If you're scalping, there's two things you'd have to consider. The extra commission fees. That's definitely something that you would have to consider. And then beyond the extra commission fees, if you're trading so many more, like just to do the proper scaling, if you're doing it with the scalp approach, that could get a little bit hairy, as I've shown you guys here, with like, there's something going on that there's really bad slippage in SIMDA funded trading. There's really bad slippage. So that's another thing. So if you have, I would say you can pull off minis on a 50K account. If it has to be a little bit more of trend following than anything else, a little bit more of trend following than anything else, and then you're gonna have a shot. That's probably where your like optimal opportunity is for sure. Oh, that's just dog shit. What the fuck was this, dude? Chop, 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 chop. All right, that's it. So bot crushed it. I mean, it's funny. You guys are probably seeing this, and like, I've seen this so many times where the bot beats my own performance that it's like, I guess another day for me, another just walk in the park of like, yep, you do all these systems to make you money, and then you start to manually trade. And it's just so fucking frustrating, so incredibly frustrating, but it is what it is. And knowing my luck, had I used something like minis or calmed down on the sizing, probably could have been patient and waited for this breakout to actually occur. It's just, there's a couple times where it looked like it did, and unfortunately you just didn't. So that's where it comes down to the drawdown, where you have to have enough firepower to sustain those times that it doesn't work, because there's going to be a lot of times it doesn't work. Like, you could have easily bought this recovery at around 11, technically 10.57, and that could have gone clearly. This time around, it tried to get going. Nope, fresh lows, you got stopped out, and congrats, you're waiting again. Then we pick back up to the trend line. Nope, right away, just reverses. You don't know. That type of stuff is not predictable. And if you're attempting to predict it, you're never going to be able to get the solution. Ever. If you are pissing away hours of your own trading time and like looking at these charts and you're like, well, what's the difference between this and that? It doesn't matter. You could have this exact same setup right here at 10.57, and you're going to be able to find examples of it ripping because people aggressively brought. You get the trend line breakout and you get the follow through. And then there's going to be examples like here where nope, actually it is a breakdown. You just don't know. So that's why it's the game of reaction rather than predicting. So in the game of reaction, you have to take advantage of what you perceive to be good risk to reward setups. But then the most important thing is to honor your risk, because you want to have enough firing power to stay in the game for the chances it does actually run. Like, that's the best way to do it. Like, without a doubt, the best way to do it. In fact, I don't even know if there's another way to do it. I see it time and time again of people trying to cosplay as these like market predictors, blah, blah, blah. And there's some truth to it potentially in like the proper time scale. And when I'm talking about the proper time scale, I'm talking about like longer term investing. It could totally work there. But, and this is a big but, the shorter your time frame, there's more noise, there's more randomness. And as much as you have a shot of going up, you have a shot going down. So when people try to predict it, you could tell them to go fucking kick rocks because they're just selling you snake oil. And if they're really, really that good, ask them for their trade report and be like, yo, let's see it. If you're like doing this day trading stuff and you're lights out for months and quarters and years, what is this? Breaking France prepares for war. Leaked docs revealed French hospitals orders to brace for full-scale conflict with Russia by March of 2026. Well, that's pretty fucking crazy. Honestly, in real time, that's kind of a good example of you don't know what's going to happen. As much as it might be gearing up for a breakout, sometimes there's announcements that people are preparing for war and then the market takes a hit. My point is like, especially in the short term, you just don't know what the next bar is going to be. You can be hopeful of what the next bar is going to be. You can be very, very hopeful. But if you're not protecting your downside risk, you're just asking to get your like ass kicked. You really, really are. So be careful with all of that. Folks, that is what I have for you right now. Obviously, I wish you the best of luck. I'm going to go hang out in the Discord, and maybe this thing breaks down. Maybe it bounces. We'll be posting an update video later on today, breaking everything that played out today and what to prepare for tomorrow. So make sure you check that out. Don't forget to like, subscribe, turn on those notifications so you don't miss any shows, so you don't miss any of the update videos. Other than that, as always, remember, especially for short-term trading, day trading, that type of shit, remember, respect your risk, stick to your risk. That's the most important thing. When you let your risk get blown out, that's exactly when you're about to get fucked. Time and time. Even if you get lucky once or twice here or there, it only takes one bad beat to give everything back. Don't be that person. That's what I have for you. I will catch you guys later in the update video, and we'll be streaming once again tomorrow. Thanks for all the good vibes. Peace.